All right. Good morning, everybody. Happy Tuesday. This is the morning show on Stock Market TV. Spencer, JC, Steve, Alfonso, the full crew with you today. We just had CPI, came in a little bit above estimates. I'm sure we'll talk about that. We got a lot of things to discuss on the earnings front. A lot of things to discuss. A lot of markets at very critical junctures, or maybe not critical, but like significant levels right now. Maybe a psychological level or a nice round number, but nonetheless, a lot of markets doing some interesting things. Stock market, bond market, saying different things. We'll talk about that. I guess today we're gonna have two actually. Anamarie Baiynd will be on at 9. Then we'll have John Netto on at 9:30. He'll break down the jobs number for us when he's done trading it, which he's doing right now. And then we'll have, hopefully, Patrick Donawilla stop by for a few as well. So that's the jam. You know the drill. Hit the like. Where's my intro? Let's start the show.
Mr. Strazza, how was Miami?
Miami was fun. Always nice. Weather was good. Food was good. Saw some
Dude,
friends.
I spoke to you on the phone. Strazza was having a great time.
The thing about me in Miami is I never don't have a great time when I'm there.
Somebody likes that town.
The Hurricanes Tar Heels game was a blast also.
That's good.
Yeah.
I was on the phone with Strazza yesterday, and I was like, dude, did you see the Baiynd tweet with the laser eyes? And he's like, what do you mean? Strazza thought it was a meme. I'm like, no, bro. He tweeted that out from his personal account. And Strazza's like,
he tweeted it. Yes.
Right. His intern tweeted it. Right.
Right.
But still, that's, we know that. Yes. But still,
the point that Biden can't use Twitter can go unsaid.
Right.
But the fact coming from his Twitter account.
Yes.
Wow.
By the time the intern gets wind of the crypto of Bitcoin up 60% in a couple of months or whatever less, that's enough. That's like the same as the Biden realizing it, right?
He's talking about the stock market too. I see you've been on that as well.
Also, another interesting one. If it was Trump, for example, then I wouldn't care because Trump talked about the market all the time. So it's like the boy who cried wolf. Not, doesn't matter. Biden, on the other hand, who's never said anything about the stock market ever, in fact, used to hate on Trump, be like, well, the average American is not in the market, blah, blah, blah. Well, now that the market's at all-time highs, now all of a sudden Biden loves the market, right? This isn't like a political thing. It's more of just like an observations, right? It doesn't matter who you're voting for or what side of the aisle you're on. That doesn't matter at all. This is only about making money and observing the behavior of market participants, and those that are not participants also is interesting. What do you say we hit the bumper, Spencer? Let's get into the markets.
And press the button.
All right, Mr. Strazza, while you were in Miami gallivanting around, some of us were here in the office working. We were working, you see.
Yeah,
we can't just go to basketball games and happy hours with financial advisors and ETF junkies. All right. Some of us have to work.
Yeah. While I was hanging out by the pool, all I really noticed yesterday was that a lot of numbers were going up.
I don't know which numbers you're referring to. Let me start with the most important. Would I classify this as the most important? I think I probably would. So for me, you know how I feel about the bond market, bro. This is the big one. This is the here, I'm gonna put it here in slide 2. Oh, Fonz already has it. Throw it up there, slide 3. So this to me is the big one. Bull market, bear market, buying stocks, shorting stocks, selling strangles. It doesn't matter what our approach to the market is. You know very well that I cannot have a serious conversation about the stock market without including what the bond market is doing, right? How long have you known me? Is that right?
Yep. Yes.
So here, I've noticed, as many of us have, that the U.S. Treasury bond market is not a safe haven. It used to be in more deflationary times. But over the last couple of years, Mr. Strazza, stocks and bonds have been moving together. Do I have that right? Can I get a witness?
How about the last couple of weeks, though?
Can you let me build it up? Jesus Christ. You walk around the sidewalk kicking puppies too? Can you let me just set it up? Jesus.
Is that where we
Over
were
the
headed?
last
I'm sorry.
over the last 2 years,
Hmm.
have stocks and bonds not traded together?
Yes, sir.
I like this sir thing. I think we might make a habit of this. However, this year, so the last 6-7 weeks or so, bonds have been rolling over. Bonds are making new multi-month lows as we speak, as a matter of fact.
That's right.
And I don't know if you heard, but the last couple of days, last week, new all-time highs for the S&P 500, NASDAQ, and Papa Dow, right?
Yep.
Do you think, Mr. Strazza, Mr. 305, Mr. Miami Beach, do you think, do you people think that the correlation between stocks and bonds is now back to what it used to be in our younger years? Or something's got to give, one of these two has it right, and the convergence is coming?
Well, so there could be some very sound theory behind this, right?
Preach.
These correlations change as the inflationary environment changes, and I think you could argue it is changing.
It's changing or it changed?
Environment.
It's changing or it changed?
Maybe it's changing now.
Changing back, you're saying reverting.
Yeah.
So reverting back to more deflationary standards.
I mean, you need disinflation to get to deflation, and I think the way Murphy really talked about it was not about deflation, but he drew the line between disinflation and inflation. Right? So I don't think it would shock anyone with a technical background if the relationship did revert.
But you got to see it, right?
Well,
Are we seeing it? Are we seeing it? Is a month and a half, 6 weeks or so enough?
Well, it's got to start somewhere, right? It's
Fair,
worth monitoring. I think it's worth asking that question. It's very important to at least be open-minded to the fact that this one could flip, and it shouldn't shock anybody if it did. No?
How about this one? All right. So Strazza, not
Sorry for being a wet blanket.
yeah, talk about a wet blanket. Seriously.
So
What about this divergence? So we had some pretty nasty bearish momentum divergences in the Dow Jones Industrial Average last week.
I have a rule. I have a
I'm
rule
sorry?
here with these. I don't overthink it as long as we tag overbought.
You don't overthink it as long as we tag overbought. Who's the technician that calls it like a three-peak divergence?
Ian
right?
would know. I think it might be Connie Brown.
Is it Connie Brown?
That's for
Three-peak
Ian.
divergence. Is this a three-peak divergence? Ian Colley, are you in the house?
He loves
this a
that.
Three-peak divergence? I don't know. What I see here is higher highs in price, lower highs in momentum. That's not usually a recipe that I like to look at and say, aha, that's the one I want to buy. Usually,
You know what I see here? I still see you reaching for evidence here.
reaching for evidence of what?
If this is the best you could bring me, I'm not concerned.
Concerned about what? First of all, who's concerned about anything? I don't know what we're talking about here. I'm just talking about.
You're not talking about your concern. I'm talking about my lack of concern.
I'm not concerned about anything either. Both of us lack concern. The being concerned is not the issue here, dude.
Dude, what's the issue?
Dude.
The bums lost. The bums lost.
Hold on, let's make a list. So bonds, red light, right?
What does that mean? Red light? It doesn't mean red light. Bonds have been falling off. Bonds have been falling for a long time. It's not anything new. I'm talking about the relationship between stocks and bonds.
Let me, for simplicity's sake, put these data points into a bullish or bearish camp, right? So
for equities specifically.
Yes, risk assets, stocks. We're talking about mostly stocks here. Okay,
stocks. Okay, equities, U.S. equities.
Multi-month lows for bonds would be red light, bear camp.
That would be, well, they are making new multi-month lows.
So okay, good. Copper, same thing.
Yeah.
Yeah, right. Dollar, probably bear camp right now. What did it do yesterday?
Dollar's up. Dollar futures are up 6 consecutive weeks. Every week this year, the dollar is up. When the dollar's up, Strazza, is that usually good for stocks or bad for stocks?
However, the dollar, currencies are very trendy like that. If you do look at a weekly chart, you'll see that when it's going up, it tends to have a big weekly streak, and when it's going down,
6 weeks in a row. This would be number 7.
Totally. So dollar, another one for the bear camp, right? Good. Okay.
6 weeks
Now
in a
do
row.
crypto.
Yeah, that's definitely not bullish.
Do crypto now.
What about crypto?
Bull camp or bear camp?
The strength in cryptocurrencies, is that bullish or bearish for equities? I don't think it's bearish for equities.
So that one goes in the bull camp. Is there anything else? Small caps perking up, speculative growth, breadth expanding. Can we give any of that to the bull camp?
Breadth is not expanding. Have you counted? I know you were busy in Miami gallivanting with financial advisors, so I'm not sure if you had any time to count.
New highs expanded.
New highs expanded. Oh, okay. I have half the New York Stock Exchange down for the year. New highs expanded relative to what? The day before?
Move this thing off of my face.
Yeah, come on, Spencer. Come on, that beautiful Italian face with schnoz. I mean, everybody needs to see it.
Listen, we're getting real granular here, right? And we're comparing breadth expansion one day over the next. I think it's been improving, not deteriorating.
Stop it, been improving. Are you kidding me? That's like telling your 6-year-old going to soccer practice, oh, that was so good, even though she sucked. Oh, that was so good, sweetheart. Oh, that was so good.
Well, was she better than the day before, JC?
Hard to get worse.
That's all.
To get worse.
That's all that matters.
Are you kidding me with this cute little bearish momentum divergence? Thing's been overbought 3 times on that chart, and you're talking about the divergence. It just keeps hitting overbought. How about that point?
First of all, yeah, great. Nobody says this needs to be 1987, bro. This doesn't have to be 1929. This doesn't have to be this great bubble bursting. Nobody's saying any of those things. Nobody's saying that the NASDAQ 100 is not in an uptrend. In fact, I think it is. In fact, I think that we're still in the midst of a bull market that is 18, 19 months old. That doesn't mean that we can't get a nice rug pull. In fact, I'm betting that we are. In fact, today, I'm probably going to bet even more that we are because it's rug pull season.
So I was having a lovely conversation over a cappuccino with Rob Koifman from Koifman yesterday morning, and while you guys were doing the morning show, actually, we peeped in and saw you guys talking to John. Yeah. So we were talking about breadth, right? And we're sitting there kind of complaining about breadth, and this is strange. And we both came to the conclusion that earlier in a bull market, early innings, it might be okay for breadth to be really narrow, like we saw last year, right? And maybe that wouldn't be, historically speaking, too unusual. But once you get, to the middle of the cycle and the later innings of the cycle, if groups are still not participating, right, and breadth is still as ugly as it looked maybe in the first quarter or the first third of the cycle, then I think it becomes more of a worry, right? So the same breadth, depending on where you are in the cycle, maybe you interpret a little bit differently. What do you think about that? I thought that was really interesting.
Yeah, of course. We're not looking at the new 52-week lows list right now, for example. There ain't nothing happened in the new 52-week lows list, right? We're looking at 10-day low list, 21-day low list. By the way, not that anything's been happening there either, to be fair, right? So that's next, right? So to Strazza's point, and Strazza has actually been making this very valid point, and I have agreed all along, that while we are getting a stock market that is less good, there are fewer stocks going up, right? In fact, half the stocks on the New York Stock Exchange are down this year, more than half, right? We're not getting an expansion in new lows, right? Yet. Probably we'll see what kind of numbers we get today, but we haven't seen the expansion of new lows yet. 10-day lows, 21-day lows, 30-day lows. That's where we're living right now. If we're sitting around waiting for the new 52-week lows list to start popping off, that's idiotic.
You'll be here for a while.
Exactly. Which is why I think that randomly running around subtracting numbers from each other and calling it market analysis is silly. So why on earth would we be subtracting the new lows list, which is not existent, the new 52-week lows list, from the new 52-week highs list? Why would we do that? I think that that's irresponsible. I think that you want to treat each one separately. Look at the new highs list. Just look at that. And then look at the new lows list if you really want to. I don't want to. I don't need to. There's nothing going on there. I already know that, like kind of using common sense. So why on earth would I subtract a absolute number from nothing, right? Why would I do that? You want to talk about cherry picking analysis to fit your narrative.
But I guess what I'm saying is, as a bull, I want even more than that. Like, it's not enough that new lows aren't expanding. Of course, the new lows are not expanding. At a certain point, small caps got to start working. They got to break out of the space. Speculative growth stocks have to start working. The biotechs, let's break out already, right? You need to see participation. Some of these cyclical or commodity stocks, they need to start working. You just said we're 18 months into this thing. At a certain point, if those groups do not get on board and start working, that lack of participation, I think.
But what if they get going this spring or in the summer? They can get. What if they get going this spring or in the summer?
I'm just saying, every day that passes, that's more of a concern. You can move that higher and higher up.
Been a mess forever. I mean, what's another month?
You can't get into late stages of a bull market.
What late stages, bro? We're 18 months in. People are still telling me we're in a bear market. What do you mean late stages?
You tend to see correlations. Stocks start moving together, correlations rise, right? Everything starts working in the later innings. We're not there yet. So I guess you could look at it in two ways. Hey, we're still, I guess, in the early middle stage of this thing. Or you could look at it and be like, ooh, this is concerning. These groups really need to start working because it's getting later.
Let me ask you this, Mr. Strazza. Any thoughts on the volatility index in the S&P 500 making higher lows throughout the entire year so far? The last couple of days, Monday and last Friday, the headline was new all-time highs for the stock market. The VIX was up Friday and Monday. Obviously up today again.
Yeah.
That was a little sneaky little, what is it from Animal House? Niedermeyer, that sneaky little son of a bitch. What is it? What did he call him?
I couldn't, something like that.
The VIX has been Niedermeyer, for those of you familiar.
Fun fact, I grew up with a guy named Eric Stratton. That was his real name.
Nice.
JC, I don't believe you when you say that people are telling you it's a bear market.
Check my Twitter stream.
Who's telling you that?
It's a bear market rally, I'm told.
Okay.
It's because of the Fed and AI, Spencer.
Okay.
That's why cruise line stocks are doing so well, because of AI.
I'm excited to talk to John Netto. I got some Fed questions.
Netto's coming on board. That's right. Very cool.
About 40 minutes from now, Anamarie will be on in 10 minutes. Let's just mention CPI that came in higher across the board. S&P futures crashing all the way down to Wednesday's level. So,
Spencer, what is CPI? Can you explain to us who don't follow these sorts of shenanigans?
The consumer price index. It measures the price of a basket of goods. We measure month over month, and we measure year over year. And actually, we measure two baskets: one basket with everything, and one basket without food and energy.
Good, because food and energy, we don't need that, right?
We don't need that stuff. We don't need that stuff. Yeah.
Cherry pick the one X food and energy. Hold on. Isn't CPI the one that we know is calculated incorrectly? Like the housing numbers in that formula we know are wrong. But they change it. They keep using it. So that
it's not that they're wrong. It's just this is not an easy thing to do. So apparently there's flaws in all these numbers.
Of course there's flaws. Nothing is perfect.
Yeah, if we know it's flawed, why don't they just fix it? If we know the housing reporting is wrong, then why don't they just fix it?
You can't. They're doing the best they can.
Oh, they're doing a pretty shitty job. Let's run down what the market is doing this morning. Dow futures down 343 points, almost a full percent. S&P futures down 63 handles, 1.23% to the downside. NASDAQ futures down almost 2%. After a really nasty reversal yesterday. That's 300 points to the downside in the NASDAQ. And then again, this is the one that stands out the most to me. U.S. Treasury bonds are getting the crap kicked out of it with equities. The U.S. Treasury bond market is not a safe haven. It used to be, but it hasn't been for a couple of years now. And if you still think it is, like, you're obviously not paying attention. And I'm open to the U.S. Treasury bond market being a safe haven again. Like, I'm okay. I really don't give a shit either way. But it's not.
It's actually been the opposite.
But it's not. It's the opposite. It's trading with risk assets.
Yeah.
Silver down 1%, copper flat, gold down 0.5%, oil up 0.5%. So not much going on there. And the dollar absolutely ripping this morning with volatility back up towards 14.5 on the VIX, and U.S. 10-year yield absolutely ripping to 4.3% almost this morning. One thing that had me somewhat cautious here is last week, U.S. 10-year yields went out at new multi-month highs. U.S. 10-year yield. This is in a rally that is based on the Fed cutting rates, and U.S. 10-year yields are closing at new multi-month highs. So that was something that didn't make any sense to me at all, that I wanted to call out, and obviously I did. And then, of course, in the old funny money, Bitcoin down a little bit, back under 50,000. Ethereum down a little bit, 2650 or so. Solana, see if it can hang on to 100. Right now it's 113. Total crypto market cap 1.8 trillion, Mr. Strazza, highest in a couple of years.
Yeah, the cryptos are really working, which is just so nice.
And if the Nasdaq gets a 10% haircut, you think cryptos are going to keep working or no?
We'll talk about that when it happens.
So in this whole stock market thing, we think a few steps ahead, right? A lot of what if scenarios so that we can adjust and position accordingly, right? That's how we do things around here. I don't know if you heard. Are you new here?
Okay. Yeah. So give it to me. What's the question?
So the question is, if the Nasdaq 100 has a 10% haircut, 8%, 10%, what do the kids call them these days? Garden variety, right, Spencer? I know how much you love that.
The only way I could answer that question, right, because everything that we do with these buy and sell decisions is a risk.
That's right. So just answer me this. Answer me this.
Let me answer the question. It's such a good question.
Mm-hmm. If the Nasdaq 100 gets an 8 to 10% haircut, which is perfectly normal, in fact, it would be weird if it didn't. How is Bitcoin and altcoins doing in that environment? Gun to your head.
Right.
No one's going to hold it against you. Just what do you think?
So the answer would be poorly, right? But I have to ask myself another question when I think of that question, which is, what if the NASDAQ rallies 10%?
Right. Yeah.
Right? Because that's the reward side of the equation. I can't think of the risk without thinking about 100%.
Hundo P. Hundo P is what the kids say.
So yes, thank you. This was today's edition of Investing 101. That's
right.
Works.
I like that. I like that a lot. Strazza, are cryptocurrencies and Bitcoin, are they an inflation hedge?
I don't know.
I don't think so.
What
I think let's put that to bed. I think we can probably
stock market hedge.
I don't think about it. I don't think.
Hold on. Or are they just more tech stocks?
They're speculative assets. They
are software stocks, Strazza?
The things that I speculate on.
Are they software stocks, Strazza?
Yeah, maybe. Hey, we're gonna have an interesting.
Are they high beta stock? Are they like high beta, or are they more like low volatility?
Super high beta.
Super high beta. There should be a super high beta ETF, like the high beta, but the ones that are like the next level of beta. Super high.
I think you're making them. But I think you're making an important
Extra
point,
beta.
right? Like for every copper overlaid with S&P 500 or bonds overlaid with S&P 500 chart, we really should be doing a Bitcoin overlaid with S&P 500.
But you see, my friend, the bond market is a real asset. There's $130 trillion in the bond market. Copper is a real global asset. Bitcoin is $1.8 trillion, which is cute. It's adorable. We've made a lot of money in this adorable little tiny asset class. But are you going to go out there and have the audacity to suggest that the cryptocurrency market is as relevant as the $130 trillion bond market? Give it to me. Let's hear it.
Oh, it's right up there with it. Yeah, they're both very important. I'm not going to say it's very important, but absolutely. There is nothing that tells you more about risk appetite or the animal spirits than crypto markets.
Wow.
I agree.
I think both of you, I think we are all now dumber for listening to the both of you.
We have seen
How are you going to stay in the cryptocurrency market is a better risk on, risk off indicator than the fucking bond market.
No, it's not a better risk off indicator. It's a better risk on indicator.
We have seen this too many times, JC, cycle after cycle, where when I open my Binance app and everything on the screen is green, I also open my watch list here, and all the most heavily shorted stocks and the most speculative stocks are up 10, 15%. Those things happen together, not once, but every cycle. So when cryptos are working,
everything these guys are saying is completely
okay.
wrong.
I have a question. I have a question. Is it also possible?
Now, dumber.
Is it also possible that crypto is just so young, too young perhaps, that we don't really have enough instances of how it behaves in stock market correction territory to really say for sure?
No.
No?
I agree with you guys that the cryptocurrency market is a great indicator. Strazza and I laugh about it all the time, how we don't need futures over the weekend because we got the crypto markets. Like, I'm with you. But to suggest that the crypto markets provide better information than the bond market,
I didn't say that.
It's psychotic.
Yes,
you did. Chat, come on. Did he insinuate that? Come on, guys.
I just said, I'm not picking.
Listen, 1.8 trillion. Very impressive. Also, 1.8 trillion. Very impressive, right?
It's one thing to sit here and say, oh, bonds are making new multi-month lows. We're talking about treasury bonds here.
Yeah.
Talk to me about credit. Yeah,
have you seen credit spreads? Have you seen credit spreads? Did you see that reversal yesterday? Did you see the momentum divergences? Did you see the lack of overbought conditions? You want to talk about credit spreads? I'll talk credit spreads all you want.
You know, I'm a little bit concerned. Spencer, hear me out. I'm a little bit concerned because since we've been doing this this fun and games with the bull bear stuff, the market's literally been ripping like every day. It's like literally has not been down.
Which market?
This is we talked about this. Go watch this. We've ironed this out. Okay, the S&P 500. So this is like the first real day. What if we get like 2 days of the market actually going down?
First of all, the market hasn't even opened today. So settle down. The first real day. Let them dance.
I'm excited for you. I'm excited.
You're excited for me. I don't need your excitement. Yeah. All right. I don't need you to be excited for me. I'm a big boy. I can handle myself. Market hasn't even opened yet. Let them dance. Spencer, tell them. Let them dance.
I'm just saying.
Let them dance.
Some markets have opened. Some markets have opened.
Getting the shit kicked out of it. The German DAX looks nasty. Woo, nasty.
Oh my God. What if we have like back-to-back down
JC,
days?
now do Japan. Now do Japan.
The one that's kissing those 1989 highs, that Japan?
All-time high for my life. For my lifetime. New high for my life.
You're like a child, so that doesn't matter.
Okay. 34-year highs. I'm just saying.
Yeah, you weren't alive when the Nikkei was.
Isn't that funny that I can say now do Japan and imply, bullishness, right? Yeah.
Spencer's learning how this works. You see, Strazza, he's been paying attention.
Sure.
He can be just as obnoxious as the rest of us.
Yeah.
And I don't want to blow by Spencer's question or his point because I think this is an important topic. And it's something that we do discuss internally. Do we have enough history to say anything like this about crypto? And I'll open it up to you guys. I don't think there's a right or wrong answer. It is what it is. We have a little bit more than 10 years of data.
It's super funny. So there's this app online. It's called Twitter. I think they changed the name to X, right? And there's like all these people on there, crazy people, smart people, all kinds of stuff. All they've been telling me for the last few days is just how small caps people are rotating into small caps. Breadth is expanding. JC's an idiot. How many of these small cap breadth are expanding people are going to be tweeting at me today, you think? How many you think? I'll take the under.
I mean, listen, I gotta get through my breadth charts, but the progress was made.
You don't need to get through your breadth charts. You could just call me and I'll tell you.
No, I gotta look for myself these days.
Go look for yourself, buddy. Go look for yourself. You go count. Counting is very encouraged around here.
All right. Listen, no. I guess Jason doesn't talk about the crypto history.
Let's talk about this with our guest, Anamarie Baiynd. She's a trader. She's an author. She runs thetradingbook.com, and she's absolutely lovely. And I'm sure she has thoughts on this. So
she's great.
Yo,
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Anamarie.
How are you, gents?
Oh, just another day, Anamarie, just another day. Guys, for those of you who don't know Anamarie, she is OG, right? You don't laugh. You're OG. Like,
that means original gangsta.
Yeah.
She knows, Spencer. She knows.
I do.
Anamarie, she goes back to Eddie Elfenbein days. She goes back to Brian Shannon days, Greg Harmon, Joe Fahmy. Am I wrong?
Yeah. No, you're right. You're right.
Remember that crazy guy in DC, Charts Gone Wild? Like, this goes way back, right? You're laughing because
I've been very engaged with the commentary this morning. I have a couple of things I want to pick your brain on.
I figured you did.
Yeah.
What do you got?
Well, the first thing is on the RTY, I heard a very interesting argument that says the Russell is going to naturally be something that's underperforming in general, simply because as you get better and bigger, you leave. And so what you're left with are sort of the dregs trying to climb.
Yeah.
And I'd never thought of it that way, but it seems to hold a little bit of water. And so that I've been in this state of, hey, listen, I'm just going to sell every bounce in the RTY I see right now, or really since whenever, because it's just been one of those things. And then the comment came to me and I thought, oh, I wonder if that's really sort of the mechanical underpinning of what makes the RTY be like that.
I think about this a lot, Anamarie. You want me to give you the answer?
Yes.
I'll tell you the answer. It's not my opinion. I will tell you the mathematical answer. All right? So this isn't my thought. This is the answer. Okay. Number one, you're absolutely right. By definition, the small cap indexes kick out all their best players.
Mm-hmm.
Right? That's just what it is, right? Like if you're crushing it, where now you're a $50 billion company, you ain't gonna be in the Russell 2000. Bye-bye.
Yeah, exactly.
See ya. They kick out their best players, right? It's like European basketball, right? It's just what it is. But the answer to can they outperform or underperform has nothing to do with that. What it has to do with is sector rotation. Yeah. Which sectors are the leadership groups? Because here's the thing. What's in the Russell 2000 that isn't in the large caps? By definition, biotechs are not large cap stocks. They're all little guys, right?
But
hold on, let me
more
finish,
than that
Strazza.
too.
And then you can weigh in and tell me what I missed. Okay. So biotechs, you got a shit ton of them, 260 of them or something like that. You have 0 of them in the S&P 500, right? You got some of the big ones, right? But those are like, right? But real biotechs, you got none. Regional banks, by definition, none of them are in the large cap indexes. You got 200 and something of them in the small cap indexes. So it really just comes down to, are biotechs and regional banks doing well or not?
Wow.
So I think it's more of an interest rate sensitivity, because if you recall, throughout the 2000s, and I'm going to show you the chart now while Strazza weighs in here, throughout the entire 2000s, yes, small caps were kicking out their best players, as they always do by definition, but they outperformed the entire decade, right? So weigh in, Strazza, what I miss?
I think it's so ironic that Anamarie is asking this, because I was having a conversation yesterday with somebody from the Russell. I got this sweet visor, and we talked about it. We talked about this exact thing. So they're well aware of the fact that the Russell 2000 underperforms not just the large cap indexes, but also the S&P 600, right? The other small cap alternative. And
so
he made 2 points about this.
Wow.
Yeah, I'm wearing my Russell hat. So he said Tesla was in the Russell indexes for about 10 years before it was in any S&P index. Uber, more recent example, was never in the S&P 600, never in these indexes. It was eventually added to the S&P 500, but it was in the Russell. It's been in the Russell, right? His point about that was they think that market cap is the best filter, the best quality filter. The S&P indexes have like these profitability filters and requirements and different things. They make it hard. The Russell says, we're going to let the market decide. It's all based on market cap. And they're aware that analysts and professionals prefer their indexes for information because of that. They're not making any quality selection. There's no criteria. They're just putting in the biggest ones. And it's that simplicity that, they're very aware of, and that, that would be their answer.
Yeah,
I thought that was interesting.
absolutely. And yes, I am looking for my son to get kicked out of the Euro League. I'm hoping.
You see what I did there, Anamarie? See, for those who don't know, Anamarie is very blessed to have a son who plays professional basketball in Europe, and we're all rooting for him to get kicked out.
Yeah,
So cool.
absolutely. He's in Portugal now. He's in Portugal now. So
that's cool. Where was he before?
He was in the British Basketball League.
And now he's in Portugal.
Yeah, now he's in Portugal.
My European basketball game is weak. Is Portugal, is it a lateral move? Is it a step up, down? How's he doing?
It's a step up.
Oh, nice.
Yeah.
Who knew the Portuguese were such hoopers?
Yeah, it's a step up. And he's with a really, really good coach that as soon as he got there, he had a meeting and the coach said, hey, listen, here's the number one thing. All my good players leave, and so I expect to say goodbye to you within 6 months.
Oh, shit. Hell yeah.
We expect to be seeing him in Spain or Greece sometime soon, Anamarie. How about that?
If he's as good as you claim, I hope he comes to Miami, all right? He'll be coached well there. It's a culture. It's a culture thing. Spencer doesn't know anything about that stuff with these Knickerbockers.
And Anamarie, I know what's on your mind. You've been thinking a lot about semis and cyber and Nvidia especially, and I think we have a chart of Nvidia if you can rock that up here. What exactly do you think about this?
So with earnings on the horizon, my favorite trade with this kind of blast off move is a double butterfly. And so I think this is overheated, and it's going to be it's a buy the rumor, sell the news, but it's just going to come down, base a little bit more, and then take off to where it goes. I think somebody gave it $1,000 price point.
Anamarie, I'm more of a single butter kind of guy. Can you explain what a double butterfly is gonna entail here?
Okay, so what I'm going to estimate is just based on range of motion. And so that sideways frame that you have that shows the breakout, it looks maybe like it's about 2x of that range. I can't see it very carefully, but I'll let you correct me. And so that's up 2x out of the breakout, right? So it's just a measured move of 1x, 2x, maybe a little bit more over 2x. So my suspicion, if this is a buy the rumor sell the news event, is that it's going to come down to the halfway breakout mark, which should be, what is that? Maybe about, I don't know, 686 something. I don't know, something like that. And so I'm actually framing this straight out today. So that was very, very cool that this name's come up. And so what I want to see is a massive expansion of price into the middle strike of the butterfly. And so if I think it's going to come back to 650, I'm going to take a 700 put. I'm going to sell 2 of the 650 puts, and I'm going to buy 1 of the 600s. And that's going to cost, I don't know, a couple of bucks, because I'm going to do it out in April where the vol is not something huge. And then if I'm wrong and it breaks north one more time because everybody's thinking, oh my goodness, this is a 261 retracement or whatever that number is, and they go, I'm going to short it there, and they're all buy to cover, then I'm going to expect it to move sharper to the north before it collapses. And so I'm going to take that 750, sell to the 800s, buy the 850, and I'm going to go far out enough. That the options are not going to be egregious. And so I might end up spending $10 for both of them with $40 upside because the spread is $50 wide. So what I'll do is I'll wait for the explosion either to the north or to the south, and then I'll cover the long side of the butterflies, right? Now, if you're pricing that, you're like, holy cow, that's expensive. Make the butterflies tighter, but the key to winning in this strategy is, one, you got to have volatility in the stock so that a price expands, but enough volatility so it expands and then contracts. And so you're looking for that middle strike for the sweet spot. And that, I think, is going to be what I'm going to be looking for in general to feed it out. It just depends on what the pricing is right now. I've had butterflies on this all year long, and they have exploded. I'll buy them out far ahead. Like in December, I bought February's. In January, I bought March. And now I have some in April and May. And all the call ones are just exploding. They're absolutely exploding. Some are over the middle strike, but they're still in the green because they're so far away.
I like where Anne-Marie's head is here on this particular situation. Strazza, I want to turn it to you. Any thoughts on Nvidia literally hitting our target yesterday? The one that we had on the breakout above 500? It literally hit it yesterday. Got there a lot quicker than I thought, by the way.
Oh, my gosh.
I did a video Friday, and for the first time in a long time, said, feed the ducks on this one. Depending on where you got in, I think,
you didn't buy the breakout above 500. I mean, I don't know what you're like. That was such a clean trade. Like, trades don't get cleaner than that. What was the high? Like in August, we consolidated for a few months. We broke out. I mean, that was clean.
Early leader. It was the AI play.
Yep.
I hate the phrase like the easy money has been made, but like I think the easier money has been made in this one.
Yeah, but you could have said that last year. Hold on.
I know.
You could have said that last year before the consolidation. Then it consolidated, and then you got easy money again. We could very well be in another situation where we consolidate, and then there's another opportunity of easier money. I mean, I don't know, but
that's my expectation for this one.
Yeah. So consolidation, then we break out to new high. I could see that.
I think it's dangerous to tell people not to own this stock, but at the same time, depending on where you got in,
that's why we don't tell people to do anything, because I don't give a shit what other people do.
Like,
yeah,
it's not my problem.
I mean, it's a place, every time I look at Nvidia and I don't think about buying, I remember looking at the calls way out in the money, like the 600s, going, it's never in there. I'm not wasting that money. And having it just shoot the moon, I feel like I know that a party's going on down the street and I wasn't invited and I'm walking by staring in the window, right? It's
Are you
just
calling the cops for too much noise? Is that you? I'm just standing on the corner trying to feed my daughter.
This stock has not just like rewritten the laws of fundamental analysis or what we always thought about that, but like technicals too. I mean, for a stock this big to just be, the kids call it mooning. It's mooning.
Anne-Marie
like
gets down with the fundamentals. Strazza, what do you make of the price going up but the stock getting cheaper? Is that true?
Listen, yeah, right. But how do you, I think more importantly, just anything you hear about this company's valuation, throw it out. I'm not going to tell you it's expensive. I'm not going to tell you it's cheap either. PE goes up or down. It depends. What's your growth rate? Like, what are you pegging earnings at a year, 2 years out from now? How do you value a company that's growing this fast? Have fun. Not for me. I'm not going to try and play that game.
Yeah, it's a tough game.
It's an amazing business. What they're doing, amazing. I'm not even going to try. That one's too tough for me.
It's as easy as following price, just shutting your eyes and just following price and going, okay, here's my risk load and I'm going to enter here. Whether it's a small position, a big position, whatever, just risk manage it and go, listen, I'm just following price. I don't I don't care about anything else that's happening. I'm just following price.
What else is on your mind, Anamarie? We're very blessed to have you join us on the morning show. It's the best morning show in finance. I don't know if you heard.
I know. I listen.
Kudos to you for getting the invite.
I know.
So what?
Anne-Marie, have you been like mostly leaning into the large cap tech trade, and are you thinking that's probably still the right playbook?
So for about 2 months, I've said, hey, listen, let's just go small. Wherever we go, let's just small position, manage the risk. Small, because literally we're moving in such an unusual way that it feels like whatever is underneath holding the market is the strings are getting a little whatever. And so I just fall back on, Occam's razor. Just follow price. We're going to buy the dip. We'll follow the price. If it breaks down 3 days in a row or breaks a key level of support where you had heavy congestion, let's just cut and run. Yeah, it might come back, but we're not concerned about that. And so that tight action event really only gives me a few places to sit, and that would be semis. I've been touting the cyber bandwagon since, forever.
For good reason.
And so it's finally getting a clip. So places like CrowdStrike and, I would say leave the laggers in cyber alone and just go with price strength. Just go with price strength as long as it goes, and then just sit with it. And then here's the thing. No, guys get up and go, how can I pull one over on the man? And so I heard a cyber security conference clip the other day, and the guys speaking in front of the room said, hey, listen, if you're a big organization, it's not a matter of when you're going to get hacked. It's how long it takes that you figure out you've been hacked and what's been taken in the meantime, because they are just 1 or 2 steps ahead, and everybody's, especially with quantum computing and all of that stuff coming, it is literally the wild, wild west out there. And until prices start to break, I think more and more people are going to go, holy cow, we've got to invest heavily in this sector and build more things to come to pass, or, we're going to get up one day and half the country's going to be dark. So I love the cybersecurity space, and Palo Alto Networks has been, a beast since forever.
So industry leader, I heard their CEO, Palo Alto, at some conference on the TV weeks ago, and I absolutely loved what he said. He was speaking to, their position as one of the leaders in the space, and he said, we're going to be at the forefront of every emerging trend, and if we don't build it, we'll buy it. Like, that was his attitude. And I was just like, that's just that's exactly the way you want to think as one of these big tech companies. And like you said, this is the space is just growing like crazy. This is some sort of secular mega trend. And I hear it thrown in as a AI beneficiary a lot.
Oh, absolutely.
With all these new things with AI, there's more demand for these cyber companies.
Have you guys played with Genesis at all?
No.
I haven't. No, is it cool?
Yeah, I have trouble with the prompts, but I'm learning that. So that's
going to be a new skill. You know how like people are like, oh, AI is going to take away jobs. Like, I think it's going to add jobs, because if you're good at these prompts, someone's going to hire you to do it for them, right?
Yep, totally agree.
Exactly.
Totally agree.
So I think that's one of the best ancillary plays. Like I think of it almost like as a picks and axes area. It's Accenture, it's Gartner, it's any of these tech consulting firms. Think about the position that they're in, right? We're all going to sit here and argue about who's going to create like the AI platform that wins it all, right? Like, who's going to create the Google of AI. How about just buy the consulting companies that are going to learn whatever that tool is and then charge people by the hour to teach them how to do it? Like,
Yeah.
isn't that a lot
Yeah.
safer too? You don't have to pick the
Yeah.
winner.
That's
I
a
think
burgeoning landscape. We're going to see all kinds of new things pop out just from the use of that AI, just building brand new skills. And certainly for me, because I trade every single day, all day long, that the amount of answers that you can get from those prompts are staggering. They are staggering, and some of them are incredibly useful.
All right. Let's turn this back to the equities market, considering Anmarie's and they're trading every day. What do you think is getting overlooked? Like, where is your head currently that you're not seeing others discussing, or what's like, where are you like, why is nobody paying attention to this and I'm the only one? Like, do you have that feeling about anything?
You know what? I'm going to be super frank and say I feel a lot like a knucklehead right there, because I'm looking at it, and what I think is important is not affecting price. And at the end of the day, I'm going to go, well, if that were important, just like I am on the exact same bandwagon as you in terms of the bond market. Somebody's with a bullhorn going, fellas. And I honestly believe that's what's happening in the bond market. And so when I think about things that should be happening based on whether I think, wait a second, something's just not right, and it's not happening, I'll just throw it out. Instead of going, no, it's happening, I just need to find somewhere else for it to be a reason, I'm just immediately going to go, that's out. And it really comes from being very simplistic about, if you don't see the evidence for something, a feeling, a commitment that you have loosely from an idea, then you toss it out and you look for a more firmly held idea that will hold conviction that comes from price action. And I literally get up in the morning every day and go, this is hilarious. Because it feels like 2020 is what it feels like. It feels like 2020. I get in and I go, oh, I wonder if this will come in, and I want to buy support because I'm always looking for value. It's like, see ya. The bus.
I know, but Anne-Marie, while the indexes have grinded higher, most stocks are not. Half the New York Stock Exchange is down this year.
Oh no, more. Absolutely. And that's really, I also listened to an incredible podcast that talked about why it is that the index continues to rise while its components continue to grind with just a few people benefiting. And this rotational event says that people will look and go, well, that's not performing, so I'm moving here, which amplifies the growth of the big ones and minimizes the others. And then what they're doing on the back end is going, hey, everybody's buying the index as its own entity without respect to its components, because they're cost averaging into their 401k and they're just buying the S&P every single week, or they're buying the VOO, or they're buying the SPY, or whatever it is. And it's a bifurcation of the whole. And what we're seeing now is that the sum of the parts is really not the whole that we're looking at. There's something, I hate to punt, but that's what I feel like I'm doing, because I know something is going on, because it feels very different, because I have been around for 20 years, but I cannot get a feel on it. And I'm telling you, Japan is running because the bond market thinks that they are going to lean on yield curve control in the other direction and start asking its people to repatriate.
I'm glad you brought up the Forex markets. Dollar index futures up every single week this year. 6 in a row, working on number 7. So while the indexes, S&P, NASDAQ, have gone on to make new all-time highs, the advanced decline line has been rolling over for a month and a half. The percentage of stocks above their 50-day is making new 3-month lows. The percentage of stocks above their 200-day making new multi-month lows. Dollar index up 6 weeks in a row. Interest rates, U.S. 10-year yield making new multi-month highs, right? Like everything except the indexes is moving one direction. And then you have these 3 large cap indexes moving higher.
Do you
right?
have to? Do you have
the German DAX, right? Because we're talking about Japan. We're completely ignoring Germany. I would argue, even ahead of Japan, I've argued, not just today, I'm not cherry picking, even before today, I would argue that Germany is more important than Nikkei.
Yes.
But whatever, let's just call them even. Let's call it a wash. Germany has not gone up this year. Germany is below the highs from the last couple of months. A nastier bearish momentum divergence than you're seeing in the United States. And, you know, the leadership group in Germany is obviously not technology. It's industrials.
Yes.
Which is one of the biggest reasons, a lot of reasons why I think industrials are the generals.
Yes.
Most, you know,
Agreed.
massive diversification in the sector, all kinds of industry groups, market leader, most definitely. And it's outside of the AI tech thing. To me, the industrials are the generals. Strazza agrees. Spencer might even have an opinion. You know, industrials are the generals. If you lose the industrials, that's all she wrote.
Yeah,
Thoughts?
for sure.
Strazza?
Yeah, I mean, all of this bad stuff. Do you have to give back all the money you've made on the long side this year?
No.
No.
No. That's actually the point.
100%.
Because rule number 1 is don't lose money, right? So, you know, a lot of us, we are incredibly fortunate to be wealthier than most of the global population. Let's just leave it at that.
Yeah.
We want to keep it that way, right?
Right.
That's the first step. The second step is to then make more money. But the first step is to stay where we are in societal, you know, hierarchy, right?
And I think it's also important to differentiate. We are quoting the nicey a lot when we talk about breadth, which is not the wrong thing to do, right? That's where the information is. But at the same time, most people's money is in the S&P 500.
Okay, but the S&P 500 is not a stock exchange, genius.
What?
The S&P 500 is not a stock exchange.
What are you talking about? I'm saying most people's money is invested like the S&P 500.
Right, but most people lose money, so good.
Do they? If they're passively, whatever. Keep going, Steve.
As long as it's not a dumb point, then go ahead.
I think it's important to differentiate between, yes, the breadth. When we look at the nicey, which is comprised of all these biotech and these tiny stocks that nobody owns, right?
Right. So that's why you filter by larger companies so that you take all of those little nothings out of the equation. And it's the most important stock exchange on planet Earth. And we're not Americans. We are Earthlings.
I just want to make the point that most people's accounts are a reflection of like a large cap market cap weight index. Most people are doing really well out here. That's sentiment information. It also matters when you just open your account and look every day. When we talk about S&P 500, it's not just 7 stocks either. S&P 500 AD line, last I checked, was like making a new high too. So large caps in general, breadth is pretty fine. When we look at these larger indexes, that's when we can start talking about bad breadth. But I think most people are doing really well, and that's important to point out.
Good. Now it's their job to not give it back. Usually they give it back. Right, Anamarie? Tell them.
Yeah. Well, that's
Tell
true.
them.
That's true. But here's the thing. Just because we're looking at something in a state that feels, I don't know, I'll use the technical term rickety.
Yeah.
Just because it feels a little rickety doesn't mean, you know, we're going to see 2,500 on the S&P next month or whatever. It's just a space of the natural ebb and flow. You ride a stock, you feed the ducks, you wait a bit, gather up your cash for the next time something bases beautifully or whatever, and then you reinvest, and then you feed the ducks, and then rinse, wash, repeat. Over and over and over and over. I guess you would wash first and then rinse.
I like how you did that. You know, feed the ducks. I agree. I couldn't agree more. I love exactly how you said that because that's how I look at it too.
I look at a lot of these mega cap tech charts, and I think, boy, if you're not selling some here, then when are you?
Exactly. That's just pure greed. If you're not going,
yeah,
hey,
if you're not selling it when you have all these divergences, what the hell are you waiting for?
Also, just they're up a ton. Like, you know, I remember.
Yeah, but they were up. You could say they were up a ton, you know, 6 months ago.
Well, we were saying it
That's true,
last
too.
year.
There weren't any divergences back then, you see.
Well, we were all looking at like the performance gap, like the margin between like the Mag 7 and the rest of the market last year, and being like, "Wow, this can't last." And then we come in this year, and it's the same thing again. So I don't think it lasts forever. Is all I'm saying.
All right, guys, we got to let Anamarie run. Market's open. Anamarie, thank you so much
Thank you,
for
Anamarie.
coming
This
on,
was
as
great.
always.
Thank you.
Pleasure. I love being around you guys. I learn
Thanks,
something
Anamarie.
every time.
You're the
Take
best.
care.
Thank
Bye.
you. She's the best.
So you hear what she says? She loves being around us. She mostly means me. Oh,
Not true.
ask her.
That's all right. Okay, we have Netto here. I want to bring him on for like just a couple minutes here. We'll talk about the CPI print that we got about an hour ago already. Dear Lord. Time flies when you're having fun. All right, Netto, bringing you on. Yeah, just screw it right now.
Bring him on.
Mr. Netto.
Yeah. Hey.
What up, sir?
Good morning from Super Bowl capital of the world.
How was
That's
it?
right.
Was the city wild? Was it crazy?
We know how to host a party, JC.
This is true. Now, my question, no one will ever argue that. My question is, was it too crazy? Was it too much? Because that was kind of my concern. Like, Vegas is crazy as it is.
Relative or absolute basis?
Clearly, we know on an absolute basis it was wild. On a relative basis, was it too much or was it just right?
I think it was just right. I think that there's a right, because people come in sort of with this a little more impervious to some of the craziness or to some of the what would in other places be outlandish. In Vegas, it's kind of par for the course. And so, given the magnitude of the Super Bowl, given the F1 race that we had here for a lot of people, that was a big deal in November. We had the Formula One race for the first time. They actually rebuilt some of the infrastructure. So Vegas was ready to go in Allegiant Stadium. We hosted a great Super Bowl. I'm proud of my city.
Good.
Awesome. I'm proud of the city too. I mean, I don't even live there. I mean, I'm a huge fan.
All right.
Okay, so it wasn't too much. Okay, that's great, especially for locals to say, because locals in general in cities like Fashion Week in New York fucking sucks. Like General Assembly, terrible place to be. Okay, so that's good to hear. Now, so there are some people are claiming that this inflation situation, or the CPI as they call it, is like a thing or whatever. Can you explain to me, someone who doesn't care about economics, what does it mean to me? Why should I care? Should I not care? How should we think about this?
Yeah, it's to someone who doesn't care about economics, I would say care a little more about economics.
Ooh, okay, calling me out. I see.
Yeah, well, I mean, it's more about integration. We all have our ideas, and as long as you can understand, or at least begin to get an understanding of what factors move the markets, and at least do what you can to compartmentalize or neutralize those risks, then I would at least put that in its appropriate bucket. If your time frame on trades is 2 weeks, 4 weeks, 2 months, 3 months, 4 months, a CPI like this morning is consequential, but not material in that adjustment. If you're a trader who trades every 3 to 5 days, this is both consequential and material to your positions, because you can't have, if you trade on a 3 to 5 day basis, then you're looking at ranges of 300 to 500 basis points maybe in that time frame. Well, today, a 250 basis point move obviously demonstrates the materiality of this number. So, inconsequential whether you're a technical person or a fundamental person, any event that causes an outsized move in volatility relative to your time frame should put it on your radar. I think that's. That
was very well said. You were very well spoken, Mr. Netto, I must say.
Law school corrupts the brain, Mr. Parets.
All right, John, what do you make of this reaction here today? Market's acting
bona fide and legitimate. And this undoes a lot of
the wildly surprised. Yeah,
your audio's messed up, Spencer.
I'm sorry. I'm feeling your audio as well.
What?
Your audio came in a little bit.
How's that? Is that better?
Is mine a little better? Can you hear me? Okay, guys.
You sound great, Netto.
I didn't do anything.
Well,
all right.
Okay.
Okay.
So this event was consequential, because it corroborates what Powell said, and it corroborates the jobs number that we got last week. And those two things, again, we got to go back to December 10th, Fed meeting. The Summer of Economic Projections came out, just a little like sort of past 60 days, kind of where we were and where we're coming, maybe where we're going.
Yeah.
Fed comes out, Summer of Economic Projections are very dovish. Market rallies into the end of the year. The Fed starts pushing back on that in January. In the January meeting that we had, the Fed pushes back a little more, or pushes back a lot more, obviously, and we repriced to basically where there's a very low chance in March that we get an actual rate cut. Okay, the payroll number that came out on the 1st of February, 2nd of February, corroborated that. We had a hot average hourly earnings, we had a hot headline, and this was sort of, there was still one payroll and 2 CPIs left. There is no March cut coming. Any chance of a March cut, which was between slim and none before the day started, well, slim just left town. Okay, and now there's none in terms of the rate cut for March. And now the question becomes, well, with a hot number like this and with a hot jobs report, and given the Fed rhetoric, like the Fed and the market have been at a divergence. This is correcting that divergence that the Fed may have won. And so when you ask JC, why is this consequential? It's consequential because the market may have to admit that it was wrong and have to reprice themselves in line with what the Fed has been saying, and not the Fed having to change their rhetoric to what the market was saying. And that's what's going on today and last week.
Netto, one of the things that I noticed, because I pay attention to the bond market, because the bond market is a $130 trillion asset. It's not like a 1.7 trillion nothing that crypto markets are. Yeah. So I pay more attention to the bond market, as I think is the responsible thing to do as an adult, as an investor. The U.S. 10-year yield went out at new multi-month highs on Friday.
Yeah.
The bond market has been getting the shit kicked out of it. So if this is a rally based on an expectation of lower rates and rates are making new multi-month highs, that seemed a little silly to me.
No, but what John was just saying is that the bond market is pricing in lower rates coming later right now, right? That's why rates are moving higher, right? You're not getting these cuts. Fed said hell no to March. Now I think the market is understanding and accepting that March isn't happening. Goldman's out here saying you're going to get it maybe the middle of the year.
Right. So is what you're saying, correct me if I'm wrong, is that the bond market was right?
Yeah, the bond market, well, that's the segment in question, JC, because there's different parts of the yield curve that encompass that. So what we were getting was a steep up in the rally that we got at the end of last year was a huge steepening in the yield curve on the idea that the Fed was going to cut rates. And so the front of the yield curve was rallying faster than the back of the yield curve. So we had a bull steepener going on. What we've seen now is that inflation is present, and so both the long end is selling off, which means yields are going up, and the front end is selling off at a faster pace. And so we're flattening as the people have to reprice what the Fed is doing in that regard. And so it's not only what bonds are doing, but I think you want to have that conversation in the context of the entire yield curve, because each part of the yield curve sends a little bit of a different message. So bringing this back in, when I talk about the market pricing, I'm speaking more of the front end of the yield curve, which is what the Fed controls. The back end of the yield curve is what the market controls, typically. Now, when you throw in QT and QE, when the Fed's buying the long end, and some of the way that they are reducing their holdings, that can affect the back end of the yield curve. But for the most of the time in the last 35 years, the front of the yield curve is what the Fed controls, i.e., euro dollars, now Fed funds futures, which price that out. So you're talking up to 5 years, let's just say, is more Fed focused. The 10s and 30s are more market focused based on, how good Fed policy is. And the 10s and 30s are a manifestation of where the market thinks the Fed is going. And right now, this economy is hot, which is a good thing, actually. We like we like a good economy. We like people employed. We like
who's we?
We like
who's we?
Yeah. Who's we?
Who likes all those things?
I think passive investors generally like a strong economy.
Humans.
I will take rates at 5% with quarter over quarter accelerating growth. Then I'll take rates at 2% with quarter over quarter decelerating growth. Okay, you'll pay that vig. You'll pay that vig, which is something that people are reconciling in 2023 when the SP goes up, because the economy is actually strong. Profit margins are growing. Of course, there's this AI theme, but I'll take strong growth in an economy even if rates are higher than before, because that's a tax you want to pay. So think about real estate in San Francisco, New York. What's the biggest important thing in a real estate market? Location and the job market. The job market's strong, real estate's going to do well, because there are people with good jobs to pay for that real estate.
So John, to this point, I like what you're saying, right? So we're getting hotter than anticipated inflation. That's not a bad thing. It means the economy is strong, the growth is there. But at the same time, stocks and risk assets have been rallying on this expectation of cuts this year, right? So for investors and their money, what would it mean if, and we're finding out, like you just said, the Fed was right so far. What if they're even more right? What if the market's even wronger than it looks now, and we go from an expectation of 5 down to 3, down to 2 to maybe 1 to maybe we don't get a cut, what does the stock market look like in that world?
Well, the stock market, you're going to see some correction on some of the beta names, but that's where you juxtapose or compare how strong the AI theme expanding multiples is. I mean, let's look at some of these earnings we've seen the last couple of weeks. All right. Again, ask yourself as a stock owner, what do you feel about multiples that are expanding like they are in some of these key names out there, the lovely 6 or the lovely 7.
Yep.
So we see a correction because there is some of that beta, there is some of that leverage exposure on that Fed anticipation. But I think a bigger theme, especially in tech, or at least tech's a little. So let's compartmentalize that, Steve. I think it hurts the S&P more and the Dow more than it does tech, because tech derives more of their earnings from the AI theme. But there's still a correction because there is some leverage on that anticipation. But rates didn't actually fall. Okay, rates. The overnight rate is still at 5.25%, between 5.25% and 5.5%. Right. So it isn't like there's a whole bunch of low interest rate money that's come into the market that people have invested. So that will impact the multiples more of the S&P and the Dow. But I think tech will undergo a correction, but it's still driven largely by the AI theme.
It would be a great scenario analysis to see which force is stronger.
You really have to start asking yourself which stocks, right?
Yep.
When we talk about these things.
All right, John Netto, we'll let you run. John, thanks a lot, man. Great stuff.
John, you're the man. Thank you, bro.
Steve, JC, good stuff, man. See you.
Adios.
All right, how do I
John
bring it
Netto
out of
with
here?
some perspective here.
Sorry, Pat.
Ooh,
Sorry, Pat. Sorry, Pat.
Hey,
Sorry.
Pat.
Too bad
that was not ready.
A little foreshadowing. No big deal. A little foreshadowing.
Sorry, my mistake.
Man, good thing he had his clothes on. Right?
Woo! You imagine?
Yeah. Wait, can we? We have Pat here. I want to bring him on, but I do want to talk about the hot corner for real quick. Just we had a very interesting thing happen yesterday.
Did you guys talk about New York Community Bank yesterday?
Yes,
we did. Great.
JC criticized the size of the purchase,
especially considering what the director of Aon bought, 15 milli.
Yeah,
and then all these knuckleheads together can't put together 800 grand. Like, what's the matter with these clients?
It's a vote of confidence move. It's a vote of.
So that's not what JC thinks.
It's the opposite.
We'll talk about it.
Okay, hot corner. Here we go, and then Pat.
Hot corner. So hot right now.
Okay, so let's talk about the NYCB. I agree with you if you were saying, hey, these amounts, this is really a nothing burger, right? There were something like 7 or 8 of them, though, right? So it's a coordinated effort where the board is together and they're saying, we got to put a vote of confidence in our stock. Let's all buy it. You have to do it. I don't know what took them so long, right? So don't overthink this, right? I don't know if they're necessarily expecting to make money, but why do you have to do it? I'll tell you why. One industry, group of stocks, the entire market, where most stocks, the fundamentals impact the stock price. Right? Over the long term. That's how most stocks work. The fundamentals drive the stock price. Do you know of any stocks where the stock price can actually drive the fundamentals?
MicroStrategies.
Any company that uses a stock as a currency, theoretically.
MicroStrategy.
Right?
No, this is what it is. Banks are deposit-taking institutions, right? So there's a huge level of trust that goes into that. If a stock price is cratering in a bank stock, depositors will find out. Clients and customers of that bank will know. And then they might draw their money. And then a bank run might ensue. That is exactly what happened to Silicon Valley. Exactly what happened. They came out, they dropped a press release, they thought everything would be fine. All of a sudden, everybody got spooked. Bank run, everybody's trying to take their cash back. Stock is plunging, then everybody's really trying to take their cash back. It's this crazy feedback loop. Right? So you literally have to, in this situation as NYCB, you have to come out and buy shares and do whatever you can to stabilize the stock price. The company will be okay if the stock stops falling. If the stock keeps falling, it's probably only a matter of time until everybody wants their money back and then goodbye. Right? So I wouldn't overthink that at all, but I also think it's interesting and important to just keep in mind that the way these banks work is a little bit different, or I would say a lot different than any other type of stock. Their stock price is so important to the fundamentals of their business.
All right, let's talk about this 13D here from Carl Icahn.
So it's just under 10%.
Yep.
The D triggers at 5. He didn't want to file a Form 4, which is why you're at 9.91 here. He is definitely buying weakness like we tend to see. He's a value investor. We expect charts that he's buying to look like this. When he bought Netflix or Apple back in the day, it looked like this then too. So I think this is interesting. I just hate airlines, so I can't get too excited about it. But this is a really big purchase.
But also Carl Icahn buys stocks like this. Like this is what Carl Icahn does. You could tell Warren Buffett has a technician that works for him. Carl Icahn definitely does not.
What do you think he's going in there and doing? Telling him forget Spirit, right? Just stop with that. Move on.
I don't know, man. JetBlue had a new CEO. Her first day was literally yesterday.
Listen,
and then Carl Icahn comes in.
It was her first day yesterday, and on her first day, Carl Icahn files a 13D?
Yep.
Oh, poor lady.
He smelt the blood in the water. Listen, it's not easy.
That's not going to be fun for her. No matter how it comes out, whether she wins or loses, it's not going to be fun.
Nope.
It's a loss for her no matter what.
I don't know if there's a letter yet or not, but I'll keep my eyes out. Typically, he will write a letter when he takes a position like this.
And for the record, they are great letters.
Yeah. Oh, he's hilarious.
Like, I don't care about any of this stuff, but I'll read the letter just because for the comedy.
Really good. Really, yeah, because
he's good.
He's hardcore. Yeah.
He's hardcore. I love it. The way he has such a way with words, you know.
He does not give a shit what anybody thinks.
That's right. That's right. I take some of my cues from Uncle Carl.
Yeah.
If you hadn't noticed.
All right.
Is he the OG of all like OG corporate raiders? Like he invented this game. No.
Well, it got hot in the 80s, but this has been going on for 150 years.
He might be the last remaining of that guard. He probably is. But
no, there's some new ones. There's some copycats. Bring in Pat. Let's talk about some ideas.
All right.
PD. PD was good. PD got to unmute himself. Unmute himself is usually how it's probably a better way to go around here.
Whoop.
Around these parts.
We added that name there.
So that. No, you're not in. So Pat Dunawilla, editor of the Chart Report. One of my favorite emails of the day. Tied for first with the Hot Corner. Bookends my days. Hot Corner comes in the morning, telling me about the most.
That's right. Hot Corner in the morning, Chart Report at night. That's right.
Chart Report at night. That's right.
I also I'm not done.
Gentlemen on the streets and freaking the spreadsheets.
Okay. I'm not done thinking about New York Community Bank. Let's talk about this. People care about this, right? People have money at regional banks. This is really important. The reason so they came out and dropped a press release. I think it was last week. And they were like, our deposits are fine. Like nothing's happening. Well, the precedent has been set, right? You're not going to lose your money. Even if you're uninsured, you're not going to lose it because the government now can absolutely not say to the rest of the country, hey, screw you. You're not getting covered for this, but we saved the venture capitalists out in California last year, and we covered all of their uninsured deposits. It will never happen, right? So you're not seeing a run on the ATMs like you saw last year because the market knows now. We have the playbook. We know what happens. If they go away, your money's going to be okay. They cannot. They set the precedent. They kind of set the precedent for the rest of the world.
That doesn't make the stock safe.
It makes their money safe, though, and I think maybe that's why there hasn't been a run yet, because with the stock price performance, you would have expected a run. So maybe it just never comes because people know this now. But you have to be so careful with these, regulations and interventions, especially in these like emergency situations, because, I'm not saying that they shouldn't have done what they did, but here's the thing. If they didn't, every regional bank would have gone away. There would be no more regional banks if they didn't save Silicon Valley. I really think that. Why would you ever keep your money there?
There's too many regional banks. I like what the Canadians are doing.
We would have become like Canada. You would have had the big six, and everybody else would have been gone. So
Pat,
they didn't.
Is that so bad though? Is that so bad? Okay, can we move on? I'm done with the banks. Pat, talk to me, baby. What do we got?
How you doing? Can you guys hear me now?
Nvidia hitting our targets.
Yeah.
Throw that up there, Spencer.
Yeah, Nvidia. I mean, man, what a ride it's been. I mean, what else can you ask for at this point? Up almost 50% year to date. I know it's come down these last couple of days, but yeah, it hit its target. And if you notice, the first time it hit that first Fibonacci level, the 161.8 extension, it just kind of flatlined for about 6 months. Just went sideways. So, this would probably be a decent spot for a correction or at least a consolidation.
At least.
But if it rips through that, I mean, it could just consolidate here, and then by year end, we're hitting that green Fibonacci, which is over 1,000. So we'll see.
Look, it's not just Nvidia. You saw ARM yesterday.
Yeah. Oh my gosh. And then that other weird one, right? It was like BHR or something. Beamer or something.
not Supermicro. That too.
No, BMR. Yeah, it was up like over 1,000% on the day, and then I think it ended up like.
Also, these kinds of parabolic moves, like an ARM, like an SMCI, as all these bearish momentum divergences and intermarket divergences and momentum, that's classic of that last hurrah. Classic. We've seen it so many times. Like when you stop and you look around and you try to understand what type of market environment we're in, and you see the percentage of stocks above their 50-day and 200-day making new multi-month lows, bearish divergences, bonds getting the crap kicked out of them, momentum divergences, and then you see a couple of these, types of meme stocks and whatnot just absolutely going parabolic. Like all of that makes sense, for a rug pull. That's how I look at it.
I don't know about rug pull. I still think that's a little aggressive, but I think there are definitely those signs. And to your point,
I think it's just aggressive enough.
But to your point, like there are those kind of classic signs that you're seeing, like you're saying, those stocks that nobody's heard of, but they're up 300, 500% on the day.
Oh, they've heard of them now.
Yeah, we've heard of them now.
That's right.
They definitely made some people very rich and then very poor too.
When the poster child of this rally, which I think we could bearish or bullish, doesn't matter. I think we can all agree it's been Nvidia.
Yeah.
Right? The poster child of this last leg higher, literally hitting our target yesterday.
The AI fueled rally, right?
Or whatever you want to call it, but whatever you call it, like you can't say that Nvidia was not the leader and poster child of this run. Like,
right.
Regardless of what side of the aisle you're on, bearish or bullish, Democrat or Republican, Nvidia has been the leader. And it literally hit our target yesterday. It's our target for a reason.
Speaking of politics, did you see Joe Biden had the laser eyes on?
Dude, what was that all about, bro?
Yeah, that was weird. Everybody
How many times do we have to talk about this?
The president?
It's a big deal, Spencer. Like, I feel like you're just like not acknowledging that this is a big deal.
So fill me in. It wasn't about Bitcoin though, right? It was about the Super Bowl?
It was about the Super Bowl.
Laser eyes with the Super Bowl?
Yeah, I think he just didn't get the joke, honestly.
I don't know if that makes it better or worse.
Whatever. Pat, I thought your chart of the day yesterday was very I'm going to bring it up right now.
Please.
Yeah.
Very relevant to what Yeah, we're talking about seasonality, right?
Yeah,
I'm seeing it blurry. Oh, there we go.
I was thinking about it yesterday, and last week I used Brian Shannon for chart of the day, and we were literally talking about how trend is more important than seasonality. And yes, seasonality is bad, but what's the point in turning bearish until the trend turns? So I get that this might be a little contradictory, but there are signs, like JC pointed out, that this rally is just kind of getting extended here, and I don't think it's actually a hot take to say, we're due for a pause or something. But yeah. And the period's only like 1 month. I joked there, sell Valentine's Day, buy St. Patty's Day. So, it's only like a month. And then, after that little gray bar there, just nice little seasonal uptrend until I think July or August.
It would be awfully coincidental as well if this happened to coincide with a hotter than expected CPI print, which means the market was.
I know, but to me that's silly, because people said the same thing about October. Oh, the market rally because the Fed said
Yeah.
something or didn't say something. That's such a bullshit. It's bullshit. The stock market was already going up before the Fed did whatever they people claim they did, and the market's been falling all year before the CPI or whatever it was yesterday. Like, the market's been falling all year.
I mean, what a move today. The best thing that happened in the last few days was small caps ripping, and we just gave back the last 2 days.
Yeah, because yesterday's inflation print makes people sad. Doesn't change the fact that the stocks have been falling all year.
Today's inflation print, but yes.
Whatever.
It is a big move. It is a big move here, though.
Quite the gap. You guys think it gets filled?
It's been a big move. First of all, the percentage of stocks in the New York Stock Exchange above their 50-day moving average closed at new lows yesterday.
Oh, my God.
These fucking assholes in the media are telling you the stock market's making new all-time highs. Clearly, they didn't bother to count.
So this would be, you're laughing at me. I'm saying big move. I'm sorry. This would be the largest down day for the Russell 2000 since September of 2022.
What down day? The market just opened 20 minutes ago. Let them dance.
Yeah, I mean, the best thing that could happen right now is that gap gets filled. You get a nice intraday rally. But so far...
And you know what you do in that rally? You make it rain on them.
Feed the ducks, huh?
Yeah, feed the ducks all day. Spray that shit.
And get ready for the coming bear market, or when do we buy back?
I'm thinking St. Patrick's Day.
Okay.
That's what Patrick just said.
No, it's more of a Valentine's Day massacre is really what it is. That'll be tomorrow's title of the show.
Isn't your birthday on Valentine's Day?
Tomorrow is my birthday. I almost bought myself my own cake because I really like the ice cream cake from Carvel, like the cheap one. Fucking awesome.
Like the whale?
Whale? No, it's like a circle.
Oh yeah, I know what you're talking about, Pat.
Yeah,
What is it called?
Budgie the Whale, isn't that the name?
Budgie the Whale, yeah.
No, I don't got that. Let's go on and hit that bumper. Let's do a little little reset. You know what's cool about having your birthday on Valentine's Day is that I don't get caught in that suckers, take your wife out to dinner nonsense where you pay more to have a lesser menu, right?
She has to be nice to you.
Yeah, well, she would argue otherwise. But the whole suckers, you pay more to get a reservation, but then it's like a special menu that's not as good. I don't have to deal with any of that nonsense. I'm taking my wife to a basketball game. We are going to Philly for Valentine's Day. We're going to go watch the Heat beat up on the Sixers. And if that's not romantic, then I don't know what is.
Man.
I don't know what it is.
That's funny. You found a way to make Valentine's Day all about you.
Happy Tuesday, everybody. Happy Tuesday.
What was that today?
Those of you who celebrate, enjoy a good punchki.
You're really a shitty
What is
Catholic.
Fat Tuesday?
You know that. You're really a shitty Catholic.
Fat Tuesday. Explain it to us.
It's the last day before Lent.
You want me, the Jew, to explain Fat Tuesday?
Your mother's going to be very disappointed in you. Very disappointed.
I used to teach religious ed. Imagine that.
Clearly, you need to be taught religious ed.
So if you celebrate by eating a punchki, enjoy and eat.
What is a punchki?
For me.
What is a punchki?
A punchki is basically glazed jelly donut that you eat if you are a Polish person or if you live near Poles, as I did in Detroit. It's a Polish tradition that you eat on Fat Tuesday.
Ooh. All right.
I could go for a jelly donut today, so that works for me.
I'm sure you could.
All right, so let's show this. I love the marketing by Grayscale at the conference yesterday. I just wanted to throw this up. I thought this was really fun.
What do you got here? What is this?
No comment on this, but these signs were everywhere.
What's the asterisk? Can you explain?
Yeah, I'm curious.
I don't know what the fine print is there.
The fine print is that it was not an ETF, I think is really what it is, right?
Well, it's funny, right? Because it is right now, but don't talk about that trend. So, it was all the buzz yesterday. All the coin ETFs were there. What?
You know that their compliance team was like, no, put the asterisk.
This is pretty good, right? So,
That's funny. All right,
wanted to share
Pat, you got
that.
anything?
Not really.
No.
Tough to
All
compete
right.
with that, right, Pat?
Yeah, that was tough.
Tough to compete with
Hey,
that. All right, everybody.
Tuesdays. Yeah, it's Tuesday. Spaces in an hour on the chart report. Chart request live at 1 o'clock Eastern time with Strazza and Pat. Send your requests to questions at stockmarketmedia.com. And enjoy the day. Those of you in the Northeast, stay inside, enjoy the snowy weather, and go make some money.
Adios.
Guys,
Bye, everybody.
later.
I can't take no loss. I don't